Good morning, investors, and thanks for tuning into the forecast. I'm Jake Ackerman. Markets look flat this morning. CPI number data releases. CPI number, also known as the Consumer Price Index, which is the inflation gauge. The data this morning meets expectations. The expectations for month-over-month CPI numbers was negative 0.1. Data releases, negative 0.1. Year-over-year expectations come in at 6.5. Data comes in at 6.5. So what's driving this inflation gauge down? Well, it's getting led down by energy prices. Gasoline, you're at the pump, gasoline prices are coming down. Your inventories for businesses is coming down. Now there is parts of the inflation gauge that are being a little bit more sticky. Food, shelter, but here's the deal. Energy prices, inventories, led prices on the way up and are leading on the way down. Food, shelter, for example, lagged on the way up, is lagging on the way down. Now, what the CPI number data release, what is it causing the bond market to do? The bond market typically have had this downward trend all through 2020 pegged out. They were very accurate with where the market was going. What is it doing right now? Well, the bond market is rallying on the way up. It was leading the stock market on the way up. That's what the bond market doing. What are other sectors of the markets doing? Now, understand this. The stock market is made up of a bunch of different sectors. You have your consumer staples, your consumer discretionary, which are your things that you don't absolutely need, your new TVs, your gaming consoles, your computers. Staples are your cleaning supplies, your things that you can't live without, your groceries. What are these other markets doing? So let me tell you. So you have the financial sector. That trend is starting to change. It's looking more technically bullish. Transportations, they are looking more technically bullish. Now, not every market is doing the exact same thing. You have your tech, which is not looking technically bullish. It's still significantly down, possibly providing an opportunity. Now, your real estate sector, still looking pretty bearish. Your biotechs, looking more bullish. So you have all these markets doing different things. And why am I pointing this out? On the way down, certain sectors led on the way down before the rest of the market came with it. And now we're seeing the complete opposite. We're seeing certain sectors of the market leading on the way up, specifically the Dow Jones Industrial Average. A few weeks ago, we've seen what's called a golden cross in that market. We're starting, and that's a very bullish signal. Algorithms, big institutions, hedge funds look at that technical number to say, hey, is this rally that we're seeing in the markets, that mean a run up, is this true? Is this validated? And that gives more positive reinforcements that we can take a long position, means that we're buying stocks instead of going short, means we're expecting the market to go down. So where does the CPI number lead us the next couple weeks? Because let me tell you, we don't have another inflation report until the end of January, and then we don't have another Fed meeting until the first week of February. This gives us some positive momentum to break this area in the market, this price area in the market, to follow through where some of the certain sectors in the markets are leading. And what am I referring to right now? The S&P 500. That's my favorite market to watch. It's stuck in this downward trend. Does this good CPI number give us the momentum to carry the markets, continue the market rally, continue the market up? And that will be determined. I think this is a lot of positive momentum because we don't have inflation, again, until the end of the month. So this was a good number. We needed to see it. We'll follow up with you next week as we believe that we're going to start to see the dynamics continue to change in a positive direction. Now, there's still certain things that we need to see to really validate that we are in fact defeating inflation. We're not seeing the job losses like the Fed was expecting and we're hoping. Well, not yet, maybe. But we aren't seeing, which is positive, is the wage price spiral, means wages are outpacing inflation, and then it's just a nasty dynamic that we've seen in the 70s, and we're not seeing that. We just had a report that wages actually came under expectations. So again, CPI positive development, and I think this gives us the sentiment we need to continue our upward trend. And it doesn't mean it goes straight up from here, guys. It means that maybe we could possibly slowly rally and continue to change the sentiments of the market in a positive direction. So tune in next week. We'll analyze what really took place. Did we see follow through from this good number, or was there something else that we possibly missed, or something else on the horizon that's potentially could delay our rally is in the market? So thanks for tuning in. Jake Ackerman with Ackerman Financial Group. Expertise you deserve, experience you can count on.